Hey guys, this is Terry. It's Tuesday, December 14th. This is an unscripted video that I'm recording, so just bear with me. Just wanted to show you what I was playing with today. Got to putting up the Christmas lights on the tree and noticed all the pretty colors and gave me a little idea that I wanted to share with you. So, you know, in our RRGs, we have the ability to do lots of different screens, and these colors have different meanings for us. So in our vector analysis, you'll hear me talking about a blue weekly price trend and improving, and I'm harping on these stocks that are moving up aggressively here in, let's just go ahead and zoom that up, in this improving quadrant. And I note that the vectors are blue, and well, in the background code we have this set up so that these vectors are colored based upon their price trend, whether it's improving, leading, weakening, or lagging. And this is a proprietary script from Julius that he has embedded here in the Optuma tool. Now, I have my RRG set up on the weekly, so when in conjunction with this weekly RRG, not only are these stocks in this blue improving quadrant, and you have to apologize, this is live data, so this MTD, he keeps jumping in and out of blue to red, so I think the dynamic prices are showing up here. But we have stocks that are not in the blue quadrant yet. So this color blue does not represent what quadrant the stock is in. It represents the improving quality of the weekly price trend. And if we were to look at the, let me switch this to a weekly price trend. When we look over here, let's get this rescaled a bit. That's what's got that locked on. What has happened here in Hormel recently? And I'm going to click on this. I'm going to change the color a little bit. But inside these colorized candles, we have the RRG Trendbars set up to show green for leading, yellow for weakening, red for lagging, blue for improving. And I'm going to just make that a little bit brighter blue just for the moment so that it's a little bit easier to see. But we've seen Hormel switch from a lagging weekly price trend now to an improving weekly price trend. And if we continue to see further progression, we'll more than likely see this blue candle turn to green when we get the leading condition. You can see back here, here's a period where the weekly price trend actually was green, and that's kind of interesting how it follows after a major corrective move down. It was in a lagging shape, and then you got a big bounce back up. It turned immediately back into leading condition. So they don't have to go in order. Sometimes there's enough that happens during the daily price trends that in this weekly example here that causes that to move on you. So, all right. So what I want to get back to is not so much as looking at this, but you know, I try to do my best job to interpret what we're seeing here in these stocks. And if I animate this and I go back to middle of November here, you can see all of these vectors were red, indicating that their weekly price trend was underperforming, was lagging. You know, you have some such as Humana and General Mills and McDonald's and Constellation Brands. They are up here in this improving quadrant, but their vectors are red because the weekly price trend is still underperforming. Now, when they first turn blue, that's like Lamb Research here, we start to get a little bit more interested in what's happening with these guys. Illinois Tool Works, Consolidated Edison, AbbVie, and General Mills continuing to push to the right. These stocks that they exhibit this behavior, that means they look like they are holding up enough strength and direction that they're going to become our new leaders very soon. Okay, and then so fast forward to today, this week, we've got ahead of the Fed announcement, the markets are kind of in a consolidation, uncertain period, so they're declining a bit. So rather than let my emotions worry about what's going on right there, I want to focus back on what the technical charts are telling us. This group of stocks is filtered out of the S&P 500 today for this blue weekly price improving trend fashion, except for MTD here, so I can go in here and hide that guy. That's Mettler Toledo International. They're an analytical instrument manufacturer. So I did do a little research on them when I saw them pop up. So most of these vectors are pointing to the northeast. McDonald's is blue, but the vector looks like it's losing momentum. Okay, well, okay, pretty blue colors, but you know, when we color our Christmas trees, we generally like to color them with all these different colors. Here is the current list out of the S&P of all of the stocks, and I don't expect you to read these symbols all out, but you can just recognize that there's still a healthy percentage of the stocks in the S&P with green leading trends, though there is a lot of downward momentum evident, but a lot of high relative strength in any of the stocks out here too. So there's this, and let me just rotate this back a little bit and take a look. If we just go back to, again, mid to late November, right there, and focus back in over here. Do you see this mass movement here of stocks with these blue vectors? And as I rotate them, you know, forward in time, then they turn green. It's because their price trends are continuing to lead, continuing to improve until they turn into a leading pattern, and then they're green. It's not because these are moving into the green quadrant, as I explained earlier. Okay, so, and there are a few in here that were blue or are green now that were red and yellow, and so it's not a perfect science, but obviously you can see Norfolk Southern and C.H. Robinson had red vectors here. But let's see what happened just right there. Look, so the very next week C.H. Robinson and Norfolk Southern are now blue. Here's another one, Centene Corp. Centene was red, it's now blue, and then now all of them are green. So this is how I'm looking. I like to look, maybe the entry point is not optimal when you have them moving straight up through here. So the research is taking them back to where we're starting to see these hooks form, and I talk a lot about that. So let's look at one more thing. Let's look at these red ones. So I told you I was going to bring you all these pretty colors, right? So look at all of these stocks that are in red right now. It's about half of the S&P 500 is actually in a lagging weekly price trend. But where were all of these stocks this past year? I'm going to zoom all the way back to January. Let's take this back to the beginning of the year, or thereabouts. So if you were holding stocks back in January and February that were out here in the lead and you just blindly held them, and now you're complaining because they're all underperforming, this may be because you didn't notice the warning signals. And the warning signals are these these vectors that are turning yellow, that are pushing back to the southeast quite rapidly. And the closer, obviously, that they approach this vertical polar axis of a 100 on the relative strength scale, the more likely they're going to continue to push further down here into this lagging quadrant. Now those way out here with high relative strength have an opportunity to rotate back north. Okay? And you can also see that there was a fairly large rotation out of the lagging of stocks back up here into the lead as you're getting stocks rotating out. Okay, so this is sector rotation at its best, right? At its finest. As we move throughout the year, okay, there's going to be new stocks like these ones that are in blue that are going to push over here and replace those that are leaving. Okay, a lot of these yellow stocks are going to leave this leading performance. And then there's a lot of times you can even see some rotation that occurs inside, which is fine. That's the normal cycles that happen in the market. It's not everything follows an exact circular pattern, and sometimes even the stuff that does improve here may actually decide to rotate right back down into a lagging. It never crosses the border here over into the leading quadrant. So again, it takes a little bit more than the RRGs for us to get good entry points. We have to continue to monitor the progress, and we can use other indicators and especially Elliott wave. And this is why I'll run screens and then I'll feed these screens to Bennett, and Bennett will take them the next step further using Elliott wave and other indicators to advance our conviction that these stocks are truly leader bound, right? But as we move into the July area, watch what's happened. Do you see a mass migration back to the southwest? Well, yeah. Yeah, this reminds me of birds that, like the starlings, that have this murmuration effect, and I'm sure you guys have seen that before. Whenever the birds are flying in thousands of them in mass. Let's see if I can, murmuration, Jeff. Let's see if I can pull something up here real quick. Let's see if it wants to behave. Yeah, if I just mouse over it, you've seen birds do this rotation effect. Okay, the reason that you see this is every bird is moving and is looking at the bird next to it. Okay, it's looking at the bird to the left, to the right, above it, below it, and it's going to move in a choreograph. Okay, obviously there's a leader somewhere. Okay, you can't really tell where the leader is, but as the birds on the outer edge are leading in one direction, the other birds that are following are going to generally pull the rest of the group along with them. I thought this was kind of a neat concept. You know, when I look at this, I see a mass. You see this mass? Look at all these massive vectors here. This collective group of stocks may have nothing else to do with each other. They're not necessarily all in the same sector or industry, but they are behaving like a herd. They have herd mentality. That's a good way to put it. And that's what the murmuration effect of the birds is. There's a herd mentality, and there's going to be stocks that follow other stocks to the south. Okay. And so we want to look for those mass groups and those mass turns, right? We could look at a stock individually and just say, oh yeah, it's just doing this hook. But if we don't really notice in context with all of the other stocks, we may be missing out on things. Now, you see this mass of red? You just start to notice, look over here at how much blue is starting to pop up, right? So more and more blue is starting to pop up. This is telling me that the institutional investors are pumping money back into the market. They've identified that there are buying opportunities out here, and these particular stocks that are popping up in blue are the first ones out of the gate, and then there may be more and more of them, or they may weaken again. And so as they are improving, we continue to monitor, and we're looking for the best of the best. Now in this particular case, most of those blues faded back into red, and they did not push over here into the leading quadrant. So it doesn't always happen. Okay, so this is what we're looking for. And right now, and of course, this is not the entire S&P list here. This is a screened list that I took that says, show me all of the red lagging trends today. Okay, so as of December 14th. Now the way I did that is with a script. And inside of Optuma, there's some built-in features here with this JDKRS function is the RRG tool, and it gives us access to all of the data that's in here in the RRG charts. This particular function that I've got here is looking at specifically spelling out the weekly time frame, and I'm looking for the trend bar parameter of whatever the stock is that it's searching, and I'm looking for condition number 2, which is the lagging condition. Okay, so 0 is leading, 1 is weakening, 2 is lagging, 3 is improving. That's just the way it's set up. Okay, so this particular screen that I run it with a scanning manager, and I have different ones set up here. Let's find the red one. There's the red one. And so what I have here is I have the S&P, the current membership of the S&P, looking at the last bar on the daily time frame, but I'm actually overriding that daily with the weekly by forcing it inside here. So that's just a little bit of a manipulation there. I could have left that blank, and then I could have changed the data time frame here, but it just was easier for me. And then we just execute this scan, and we get all of the values. Now, when we execute this scan, and we can export that back out to a layout, this layout now I can actually link down here, link to list, and I'm linking to the scan data. There's use the scan data. That little button there is checked, and there's my scan and all of that. So that way, all I have to do is open this one workbook, and I have my green, yellow, red, and blue. So beyond that, I think there's a lot more work. I don't even think ornithologists understand the murmuration, or you could even predict the murmuration effects of the birds. You've seen all kinds of different patterns, but I do believe that what we're looking at inside here, we can start to understand collectively a little bit more about stocks, especially since we have a fixed list of 500. Now, this is today's yellow list, and there's one in here that's green, but I think he was yellow and now he just recently turned green. So again, dynamic data. But there's quite a bit of leaders, right? So anything to the right of the vertical axis over here is leadership. Well, we've got a lot of our leaders now starting to push to the southwest. Let me just rotate this back here for a little bit, and I'll show you. Again, we're going back to mid-October. We can even go back just right to the beginning of October. Let's go back a little bit further. We're coming into September, where we recall we had a big, almost about a 10% decline in the market during September. But as we were coming out of the mid to third quarter, we started to notice there was stocks here that started hooking back to the right from this lagging quadrant, many of them turning with their blue, their vectors are turning blue, indicating that their weekly price trend is improving. And you can see even more of them, and even more. And yeah, there was a red one in here, but look what happened to this one. This is Under Armour. It actually hooked back down, said, I'm not ready to join you guys. But we know from the screen, ultimately everything on here is green today. Here's M&T Bank, here's General Motors, way over here. Did you buy General Motors on October 15th? Let's see what would have happened if we bought General Motors on October 15th. Let's get my scales a little bit larger there so you can see. And I've got some kind of wave pattern on it. October 15th. This is still a weekly price trend. I'm going to flip it back to a daily price trend. And there's October 15th. So it said go. Well, you obviously see that from October 15th, GM got all the way up to nearly $64. Now it's currently in a corrective move, right? So we've got, looks like we've got some kind of larger degree corrective move happening here in General Motors, but the long-term uptrend is still in play. All right, I'm not really here to talk about individual stocks, but I'm here more about pointing out the fact that stocks that we've got accelerating here come over here, and you can see there's GM. It just made it over in the leading quadrant right here. Started to lose some momentum this last week, and now is turning yellow. It's turning down. And all of this downward movement is price consolidation. And price consolidation can be directional, or it can even be sideways, right? So you can have sideways price correction, or you can have directional price correction. Like in Etsy here, it's a little bit more directional. Let's look at Netflix. Yeah, Netflix looks like a directional move there. Just pick another one random. Just pick another random one. This one's a little less directional. Okay, kind of depends on how you look at it, I guess. All right, so all of these are yellow today, but look where they were. They were leaders at one point. They were improving. A couple of months ago, they were improving dramatically. So on this weekly price trend, this weekly RRG, we are forecasting the stuff that's going to happen over the next several weeks and or months, because it depends on how far and how long they can hold out here, right? You can have some of these stocks stay out here in the leadership for quite a while before they start to weaken again. Now, the signs of them weakening does not necessarily mean that you have to sell everything in here, especially those that are very high relative strength. They may actually rotate right back around again. So they may be a buying opportunity to pick up additional shares, okay, as this corrective move plays out. Those that are aggressively pushing closer over here with lower relative strength, like whatever this one is, Catalent, and Danaher, maybe Danaher's actually got a little bit of momentum coming back into it, but some of these, they look like maybe they should be exited out of your portfolio, right? So it just depends on your time frame. Are you a short-term trader, intermediate-term trader, or long-term investor? It's going to depend on your time horizons, whether you're using a daily, weekly, or monthly even. Todd Gordon uses the monthly relative rotations for the long-term portfolio, because we don't need to be trading stocks in and out every day of the week in a long-term managed portfolio. So this shorter term is more for the swing traders. So there's the yellows. So we looked at the reds, we looked at the greens, we looked at the yellows, we looked at the reds, and then here is the current list of blues, right? So these weren't always blue, but they are now. So this is your opportunity if you're looking to pick something up that is going to replace stocks that you've got that are underperforming because they're yellow or red right now. Eventually those reds will turn around, but I don't know when. Can't tell you that for sure, but I can tell you that these stocks, this list of stocks right here, is the current subset of the S&P 500 that is showing dynamic strength and has a high propensity, high probability that they're going to continue to move in this direction and gain additional strength and be the leaders, be our group of market leaders. They're going to join this green group, okay? So a lot of the stuff that's in this green is still doing well, okay? So we still have quite a big list. Let's look over here. I have, in my green group, I've got 47 of the 500 stocks. We have, let's see here, let's look at this one. I've got 36 that are blue. Okay, we've got 49 that are yellow. So I actually have more green and more blue than I do yellow. Okay, now do you want to be holding and trading in these stocks that are red? Again, I can't tell you that because it depends on your time horizon, but the thing you want to look for is you want to look for some type of constructive move back to the upside, such as in Universal Health Services here. I got the little vector rotating back to the north. I don't own this or hold it, and I'm pulling it up at random to tell you that more than likely this guy may actually have completed a larger term corrective move and may be beginning to start a new rally on the longer term back to the upside. So I generally will come in here and draw my longer term trend lines in here, and investing, putting something in this, you're going to risk, set your risk profile up. If you want to buy into this and you think it's going to go up, you have to establish that I'm going to put money in here, but I may lose it if it goes below here. If it goes below here, it's going to invalidate this wave count, telling me that there's a little bit more correction to the downside. The move back to the upside here actually is a pretty good little indication this may be a fifth wave completion. Bennett, if you're listening to this, take a look at this UHS stock. We don't trade it. We probably don't have a wave count on it. But I can look here at also some of these other indicators. I'm seeing the 20-day move higher. The price is above the 20. The price is recaptured the 50. Now the 50 is way below the red, right, which is the 200. And the death cross came back here. So, but at some point that will turn back around and start to move back to the upside. So if you do bottom fishing, that's fine. You've got to look for the proper conditions and just guarantee me that you will apply appropriate risk management. Be ready to lose your initial position or cut it short, right? Depending upon where you want to assign those risks, you've got to watch that, because certainly there's no guarantee that you don't just continue like PayPal further and further down. Everybody said, oh yeah, PayPal, here's PayPal. Oh yeah, it came off the top at 306, it's down to 250. Oh, it's got to go back up from here, right? Well, no, not necessarily. The momentum carries it down, 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 down. So it's, much as we want to believe in the technology or believe in whatever, this is the trend that I'd put in here a few weeks ago. Apparently there's the death cross. There's no signs of this one correcting yet. You see how price is still below the 20 and the 20 is below the 50, and they're both moving to the southeast here. Maybe we're going to find support here. I mean, but am I willing to risk this versus the other? No. That's the whole key of the thing. Wait till you get some kind of confirmation signal. Wait till you get something like a hook back to the north. But even here, when it's in a lagging, underperforming condition, there's no guarantee that it's going to immediately shoot right back up. This is still a very weak insight here. It is shooting back in the northeasterly move, but it's still very weak. Is this the bottom? Can't tell you that for sure. It's highly unlikely given the very low relative strength that is in, even though it does have a northeasterly vector. So colors are important. They're not just pretty for Christmas trees and stuff like that. But I hope this was educational, you guys. Not trying to lecture anybody at all. I'm simply trying to help you guys understand how I interpret what we're seeing in the RRGs and how we use it with trading analysis to try to improve the stock selection that we spend a lot of time and effort doing Elliott wave analysis, trying to find the right trades, but we need to be doing so when the trend is our friend, not when the trend is against us. Right now the market's in a correction. Why would you be buying something against the market in a correction until the market shakes itself out, which we think we still got some more down cycle coming. So anyway, thanks for bearing with me again. This was an unscripted video. Appreciate all of your patience with me, and hopefully this was educational and enjoyable. Thanks guys. We'll chat with you later.